Hey everyone, this is Heather here again, and this is going to be a video on our new Trady bot, which was previously called Interesting Repeat Flow Bot. So I believe this is probably the best options flow product out there, especially for just being sort of a single tool, because we have been playing it for about 3 to 4 weeks, and the plays have just been amazing, as we'll actually see in this video. And our members have never been more happier. So I wanted to create a video on top of this board because we introduced it and we didn't do a video. So I had to just actually sort of teach about this board to our members via text. So let's actually do a video, see what this board does and how to best make plays based on this. So this actually, as you can see, this is right now, this is called Interesting Flow, but we have changed the name to Trady Flow because we had this idea on trying to find repeated flows using a bunch of our own heuristics. So it sort of felt nice to change this name to Trady Flow. So the idea for this board is that whenever a contract keeps repeating itself and people keep spending a lot of money on that contract, so that's where the repeated flow comes in. So we are saying that a contract has to be repeated in live options flow for us to even consider it. Let's say that happens. If that happens and that single contract dominates the entire options flow as well. So let's say for a stock that's at $10, there are 24 orders for that stock in the entire day. There are 24 live options flow orders, and 22 of them are for a contract that's for strike 15. The stock is at 10 right now, so the stock and strike difference is 5. Let's say that's at 15 and the expiration date for that contract is just 1 week away. Now when that happens, we expect that since smart people are spending a lot of money on this way out of the money contract, the price might significantly change and move towards that strike price. So that's what we are expecting when we see repeated flow that dominates the entire live options flow for that certain ticker. And then we have a few small sort of filtering mechanisms of our own to actually give you the best results. So for example, one filtering mechanism would be to, let's say there are 22 good contracts, but the 2 bad contracts are really bad. Let's say the total amount that was being spent on those 22 contracts is actually less than the amount that was spent on the other 2 contracts, and they were, let's say, for $5 puts 1 week out. So small filters like that. And so using a bunch of heuristics and looking at repeated flow, we come up with these brilliant ideas on which contracts we should probably go with, or which stocks we should buy or buy options for. And that has just been working fantastic, and that's why I wanted to create this video. So now that you have a decent idea on how the board works and what goes behind the scenes, let's actually explain this board, go over a few plays, and talk about a few tips and tricks. So this is how a signal from the board looks. So this was Interesting Flow for Etsy. The strike was 200. There were 5 orders for this particular contract today in our live options flow tool. The expiration is September. So this is about 2-3 months away. Then about $1.12 million were spent on this single contract for these 5 orders in total. And the strike distance from the stock price is about 34, which is very large. So you always want to see large differences between stock and strike, because if a lot of money is being spent on a strike and it's far from the stock price, then the expectation is that the price might have to move significantly to reach that strike, and that's what we are trying to look for. So right now Etsy is, let's say, at about 160, 165, and in order to reach 200, it will have to travel a distance of $34, which is a large amount, and that's what we try to find. Again, for ARC, it's good as well, but let's see a small one. 11, 6, 7, good. These are all good. So this might, but since this is strike 8 and the distance is $1, this is still huge, because the difference between 8 and 9 in percentage terms is actually large. So do sort of try to look at these differences in percentage terms instead of raw stock numbers. But let's actually see something that is not that good. Alright, okay, maybe this, but again, in percentage terms, this is okay because the stock is at 4.8 right now. Let's keep going. So maybe, yeah, this actually. So you see, there were 5 orders. The strike was at 57, and the stock, I believe, is at 57.4. So very small difference between the strike and stock price. So we usually want to skip these kinds of orders. But now that you understand what all of these parameters are, expiration, total premiums, everything else, let's actually see if, where else do we have this board. So this board in our Discord is called Trady Flow, but we also have it on our website as well. So if you go to our options market dashboard, and if you go down, then you'll actually see a table for this board as well, where you have, again, call, put, strike, expiration, then the stock strike difference. So all that content here as well in an aggregate form in a table. And you can also download this table in a CSV file. So that might help a lot of people as well. So now again that you know what the port is and how it works, let's actually look at some plays for this week, and then let's talk about some tips and tricks. So what we are going to do today is 13. We are going to go back, look at the signals from Monday, because we want to give these signals some days so that they can pan out, and then look at these. So right off the bat, we want to, especially if we are short-term traders or swing traders, we want to avoid expiration dates that are far away in the future. So any leaps, those are something that we want to just ignore. If you are a long-term trader, then you might want to look at them, but if not, then you only want to look at contracts that are expiring max in 1 or 2 months. It's good if they're expiring next week and the stock and strike difference is huge, because that means that the significant price change has to happen very quickly. So let's just start looking at these in order. We are not going to do any filtering apart from looking at ETFs. So ETFs are mostly used for hedging. So it's actually good not to look at them, because it's very hard to find a direction in them based on this flow. So first is we have a GS put, and this table is sorted on premiums. If you want to sort it on stock diff, just click on this and it will sort based on the stock strike diffs. Strike difference, but we are going to sort it based on premiums, because we want these contracts to have a large amount of premiums being spent on them. All right, so we are going to look at GS. So at this point in time, when the signal was posted here, this gets updated every 10 minutes. The stock was at about 352, because then the difference between 388 actually, right? Because it's a put and we need to come down. The strike was 370. The stock would be at 388, which gives us the 18 stocks strike difference. Let's see how the stock went this week. So again, this is Monday. Let's actually open GS. All right, so I have these levels because I created this video and it got deleted, and I'm creating it again. But before creating this video, the first version, I had not looked at these plays at all. So I'm actually looking at these as we are going through the video. So this is where the signal came in, right? About 388, right? And if you're just gone in right away with this interesting flow, with this Trady board, sometimes, and many times actually, not sometimes, these plays do not even require any due diligence. But I strongly recommend that everyone does their own due diligence. They do their own research before going into a play, because remember, there is no certainty in trading. But this came in at here, and you can see that 388, the stock actually went as low as about 372. So remember the strike price. The strike price was 370, and the expiration is actually 1 month away. So people were expecting, let's say, the price to move towards 370, maybe slightly slowly, or maybe not. Maybe they expected the price to move suddenly, and now they've just gotten out of these contracts, but they were expecting the price to move towards 370, which it actually did. So from 388, we went to about 372. So if you had gone into this contract right away, using a little bit of your own due diligence, you would have about 100 to 200% profits for this very contract. Now this contract was at least 1 month away, so it would have been fine to just go into the same contract. But if a contract is like 3-4 days away, or it's a weekly contract, even if you are leveraging that contract to anticipate price movements, you should still have at least 1 or 2 months in the contracts that you buy. Please don't buy weekly contracts. Although there is a lot more reward with them, there is a lot of risk as well. So please remember that, don't lose your money. All right, so we have the next one is LH, and again, this is a very long-term contract. So again, we have about 4 or 5 months at least. So someone is expecting the price to again probably increase very gradually. And since it's like 4 months and the price difference from the strike is only $6, this doesn't seem like that good of a play. But let's still take a look at it. All right, so the price was at, the strike is 370, right? 270. The price was at 264, and right now it's at 258. So it came here, right? The price was somewhere around here, and you can see that we have actually gone down. Yep, we have gone down. So let's say you went into this contract because you saw that there was a support here, right? So you went into this contract here. Although this is a long-term contract, so we have so much time for this contract to pan out. But let's say for the sake of simplicity, you went into this signal right away. You can see that we broke the support, and then the next day we actually closed below it. So this 260 price would probably have been your stop loss. So again, please always do your due diligence, have good risk management, because you're going to earn a lot of money with this board. But if you're not managing your risk, then you might lose some money, and I don't want anyone to lose a lot of money. So again, this would have been your exit, but still this has so much time left. So I just want to sort of push myself and give myself a bit of a hard time. That's why I'm discussing this signal. But this has not failed at all right now. This would have been your exit, just because we have in short term we have sort of failed to go above a level, and we have actually broken a support level. Then we have success again. We are going to skip this because this, again, remember, this is an ETF. Then we have Doku, and this is a very short term contract. So again, you don't want to buy this exact contract because it is just like 5 days away from when it was Monday. This is like 7 and this is on 11, so 4-5 days. So you don't want to buy these. You just want to use these to expect the price movements. The price of the stock was at 238, and someone or smart people were expecting it to go towards 250 and beyond, and they spent $3.1 million on it. So this was a good one, obviously a lot of money. Anything above $1 million is just great. So let's see what happened with Doku. All right, so this is where the signal came in, right? And right now we are at 253. So if you had 1 or 2 months in your contract, the one that you bought for 240, you would be, I believe, up about 300 to 400%, I think. So these are just huge profits, and we're not doing any DD right now. We're not looking at live options flow. We're not looking at charts. We're not doing anything. We're just following these contracts as it is. And that's not what I'm recommending, but just to show you how powerful this bot is, I'm just sort of going over these plays without any price action analysis. But here you can actually see that this was a support level. So even if you entered here, you knew that we had a support level right on the 235 level, and if we break that, then we'll just exit right away. So please make sure that you have good and tight stop losses with these plays, because these work right away and these work really well. But if they don't, obviously nothing is 100% accurate. You should have your stop loss, and the fact that we had a support level below should actually tell you that since we have a support, we can actually just go in right away, because the support will probably hold the price even if we do a short-term dip, which actually happened. So we dipped on the support level, right, and then we kept going up again. But in just 3 or 4 days, you can actually see that the price has moved about $13, which is pretty nice. So this worked right away without needing anything. But if you were looking at the chart, you would look at the support level and tell yourself that this is a good setup. Now let's go take a look at the signals from Tuesday. So first we have the Twitter signal, so 70 strike, but as you can see, it's August expiration. So someone is expecting the price to go from 59, which is why the stock strike difference is 11. Someone is expecting the price to go from 59 to about 17, let's say 2 months. So the move towards 70 might be gradual. So that's what you have to sort of see here. If you are looking for quick profits, you might not get them. But if you're looking for a 1 or 2 month swing, this might have been a perfect setup. This is something that I actually went in myself as well. So let's look at the price action again. All right. So this was at 58, I believe, right? Yeah, this. So this was at about 58, and when this came, right now it's sitting at 60. So we have already done a $2 move to the upside towards 60. Hopefully the goal is to go towards 70 by August 20th. So this has already done a $2 or $2.5 move, and the profits, I believe, for that contract are about 20 to 25%. So this is already working really well, even without any due diligence. So imagine how much your signals would improve if you are adding any kind of due diligence using support and resistance levels, moving averages, technical indicators, anything. This video was just to show you how powerful this bot is, because, and that's why I'm not doing any DD here. I'll talk about how to sort of do your own due diligence at the end of this video. So this is working well. Let's say CVAC. So this is a 716, so 1 month left. The price right now is at 109, and we're expecting the price to go to 115. So let's look at CVAC. All right, so this is where the signal came in, right? 109. This is where the signal came in. Let me actually. And since we had a gap up, this was actually a good setup if you were doing your own DD, because you would expect this gap to fill eventually. But remember, there is at least 1 month left right now. This is only June 13th. So someone is still expecting, let's say, if they have not closed these contracts, someone is still expecting the price to move towards 115. So please remember that, because there is still time. If this was a June 11 contract where 2 or 3 days were left, this would have been a failed signal and it would have expired worthless. But we have time, so don't consider it as a failed signal, because it's not. We have at least 1 month to see how it actually does. But I still again wanted to push myself in this video. So right now this has not worked well, but look at this. So this was the price, and the next day we actually did move towards about 112.5. So we did try to go towards that strike where the boat was anticipating, but we couldn't actually sort of go towards reach 115. So this was a partially failed alert, obviously, but do notice the fact that the price actually started to move towards the strike. Then I don't know what happened, he actually went down, but still we have 1 month left, so I'll expect the price to go up towards 115. Then we have AHT. Let's see what happened here. So this came in when the price was at about 5.8, 5.9, and the strike was 7.5. So the distance, the percentage distance between 5.9 and 7.5 is actually large. So this was a pretty good one, and a lot of our Discord members went in, and the expiration was only like 12 or 13 days away, 14 actually maybe. And so this was a good one. Let's see what happened. So this is where it came. Let's see, 5.9 here, right? And the very next day we actually went in the money, right? This is the 7.5 line. So the strike was 7.5. The very next day we went in the money, and now that's your exit. If you go in the money in these contracts, please do not wait anymore, since the smart money expected the price to move towards strike price. As soon as it becomes in the money and you have decent profits, just get out. Even for that docu alert from 238 to 240, those would have been like 20-30% profits. Just get out, or at least partially get out, so that you can have at least some profits and then see how the price is reacting. But the price reaches strike price, that's your exit. And so this actually panned out in just a day, and these were again like 200-300% profits in a day. Then we have EH45, but again there is some time left. So the price was at 39 when this came in. The price is at 37 right now, and I actually entered into this one as well. So this is where I entered, and we have a support that we have respected. So hopefully we have a lot more time into this. So let's see when we actually reach 45. So this would be the expectation, not this actually. This would be the sort of the level that I'm looking at. As soon as we reach that, I'm just going to exit. Let's see. And then we had KR. So again, this is a short-term contract, but stock strike difference is very low, but still very short-term. So we would expect the price to go from 39.3 at least to 39. Then let's see what actually happened. The price is at 38. So again, it became in the money right away for maybe 10 or 20% profits. But that's it. I just wanted to go over some signals, show you how much profits you can earn. We only had one bad signal for CVAC, but we have a lot more time for that signal to pan out. There was no signal that was expiring, let's say, in the next 10 to 15 days that failed. There were so many that succeeded, that were really short term and had large amounts of premium. So I think since I've been working on this product for over 1 year, I built it, I'm sort of the sole owner. I think this to date is our most powerful tool, because the place that it has been finding are just miraculous. Because let me show you something. So about 3 weeks ago at this, you can actually find a video as well on our YouTube channel. If you go, I think 3 or 4 videos before this video, you'll actually see me discussing this signal from the same board that we are looking at. So this, at this point in time, at this right here, we had a signal for ATOS to 5 right here. And in that video, I told everyone that if we cross this level, this resistance level, then we might have a really good entry. But I was very confused because ATOS was not moving. The price action was not, let's say, that good. But someone was spending a lot of money on those 5 strike prices because they were expecting it to go up towards 5 within 1 or 2 months. This is like 3 weeks ago. And I think this week, actually, the price like stayed below 3.5. This week, we had this huge move towards 7, actually, not just 5, towards 7. And those contracts that I talked about in that video were up like 7 or 800%. Now that's just crazy, because that was a signal where I just had to spend 2 minutes looking at the price action to see where is the resistance. If we break it, then this Trady flow is supporting the fact that the price is going to go to 5 in just a month or 2. So that's how amazing this bot is. And I think, again, this is the best product out there in the entire market right now from options flow side, from options flow analysis side. And I'd recommend everyone to start using it in their own trading. But now that we've gone over some setups, I just want to give a few tips and tricks on how to use these signals and how to improve your success rate. So the first would be, when you're seeing these signals, and let's say we have this 70 strike, do go to the live options flow and make sure that this contract is actually dominating the entire flow. So let's quickly do that. So this was 8, so let's go to our Tuesday and let's see, let's enter Twitter, and I'm going to remove spreads and only look at out of the money flow. And you can see there, let's sort by premium. So you can see there people were spending a lot of money on these August calls for strike 70. And this single contract, this 70 contract, there were 6 orders, and out of 7 actually. Out of 10 orders, 70% of orders were for this 70 contract. Now that's what I mean when I say the single contract should dominate. It's 70% of the entire flow, and the remaining are like calls as well. There is just one call sell for 80. So someone is expecting the price to stay below 80 till August 20, but these other people are expecting the price to reach 70. So maybe 80 is the resistance, but 70 is what we are seeing here. So that's what I mean when I say dominating. So you please make sure that the contract that the Trady bot is signaling is actually dominating the entire flow. You don't want to see 50 puts or 40 puts here with large amounts of premium, because that just means now we have opposing flow, and we don't want to go into those. You always want to go into the highest probability setups, and you get them when you have clean flow that's just going in one direction. So please remember that. And then the next thing would be, please spend maybe about 5 minutes doing some price action analysis to see if the price action is supporting the signal. Many times you don't need to, but I'd still highly recommend you do this. So with me, I usually just build these support and resistance lines, and I see if the price right now, so this is where that Twitter signal came in, right? I see if the price is at a support or resistance level. Since I'm going long, we had this support level here, so I entered, and the contract has been doing fine. Similarly, you can use moving averages, technical analysis, whatever you use, but do spend 3-4 minutes. I think you owe it to yourself, to, since this is your money, to spend at least some time doing your own due diligence. If you can do that, then I assure you will be earning a lot of money with this board. But yeah, I hope the video was useful for you. You now understand what the board does, how does it work, and how to best make use of the plays. If you have any questions, please leave them in the comments. Thank you so much for watching this. I'll see you guys around.